Netflix announced its financial earnings a little while back. Netflix stock sold off. Interestingly, Netflix beat on revenue and earnings, but then Netflix stock rallied thereafter. So, what's going on? More importantly, as a value investor, what would be a good valuation for Netflix stock? Is Netflix stock a good value investment? Spoiler alert, no. It's overpriced. And while we are seeing some big gains, the valuation is way skewed, and Netflix itself will not be able to keep up with its revenue gains in order to meet that valuation. At the same time, the consumer themselves are being tapped out a little too far. Interest rates are going to remain higher for longer. This will affect consumption. This will affect consumers across the board. On the one hand, Netflix has done a great job of getting rid of all the people who are sharing passwords. We're seeing continual increases of new subscribers for all those people who tapped out and finally gave in and started paying the fee for Netflix. On the other hand, the growth rate is slowing down. So will the economy. Netflix stock will likely move lower along with the entire stock market. Let's jump in. First and foremost, yes, I am a value investor. I'm also an economist. I'm probably an economist first and foremost, and I look at the broader economy and ask the question, what's going on with the economy? Despite revenue gains for any one particular company, you need to look at the aggregate and ask the question, how's the economy growing? The economy is growing quite well, a little too well. And because of that, the Federal Reserve has had to leave interest rates higher, will do so for longer. And this is going to have an effect on revenue growth across the board, not just Netflix. So when I look at Netflix, I ask the question, I measure Netflix stock versus, say, the benchmark investment rate, the U.S. 10-year Treasury, which is trading at 4.5% right now, asking the question, if I bought Netflix stock today, is that a better investment versus the U.S. 10-year Treasury? Now, mind you, the U.S. 10-year Treasury has a very high yield comparatively. This will affect consumers who are spending money with Netflix. And that's how I break things down. This is the fact that the Federal Reserve has raised interest rates as much as it has and will keep them as high as they will affect the overall rate of growth of all consumption here in the United States. That means the rate of growth of revenue for all companies. One of the reasons why Netflix stock just sold off was because of the rate of growth. Therefore, when you look at it from that perspective, Netflix is way overpriced, despite having rallied as much as it has. We'll probably see throughout the summer, we're probably going to see Netflix stock, along with the broader stock market, moving sideways to upward because the stock market basically doesn't care about interest rates, except for the fact come fall, September, October, November, December, it'll be time to pay the piper. The growth rate will start to show up, and savvy investors are going to look at it and say, nope, time to get out. That's when we're going to start seeing Netflix stock moving lower. In the meantime, here's a bigger look. You could see how there was a pretty big drop downward in 2022. Since then, we've kind of recovered, but haven't hit the peak that we've seen before on a weekly basis for Netflix stock. It is overpriced on a yield basis, despite being clearly where it's up. Let's break down some of the numbers. Assets, cash, and liabilities, 48.87 and 27 billion respectively, for total equity of about 21 billion. There are 430 million shares, market capitalization of about 276.8 billion. Enterprise value for Netflix itself is almost 300 billion at 297.2. Moving forward, price to earnings ratio, price to sales, price to cash flow, price to book. Let's break all of these down. You can see that on a relative basis, price to earnings, Netflix is a little expensive at 42.14. The broader stock market is about 30, a little less than 30, depending on the time of day anymore. Given that, you can see that Netflix price to earnings is rich in comparison. Price to sales, a little higher, 7.68. Price to cash flow, 36.7. This kind of shows you when you break things down that although we're seeing some movement downward overall for Netflix stock, it's running a bit rich on a comparison basis. Finally, price to book 12.25. That breaks those down. Here are your quarterly revenue numbers. 9.38 was pretty solid for Q1 for 2024. Projected revenue for 2024 for Netflix, 38.73. We're already printing 2024. What I want to look at is 2025 and onward. Margins are solid for Netflix because they're seeing higher revenue. Their economies of scale mean better margins. This is translating into operating margins and net margins. Net margins almost 25%. That's huge. Projected earnings per share 2024 18.40, and we've already printed Q1. Then 2025 22.22. So you're seeing some big future potential with Netflix stock. But then there's the comparison. Is Netflix stock a good value investment? Depends on your angle. Looking at the next, keep in mind one thing, the 1840, they've already printed Q1. Moving forward, looking at price and projections, earnings per share, that's the next 4 quarters for Netflix financials. 1913, again, we printed Q1. This would be Q1, adding in Q1 for 2025. Given price for Netflix stock and the next 4 quarters, your yield is just sub 3%. Given that, your alternative investment, the benchmark, 4.5%. Now, a lot of people don't think that investing in bonds is sexy. I look at profits as being sexy, and I don't care what the vehicle is. Given that, I've been buying TLT stock, which is price for 20 and 30-year Treasury bonds. The Federal Reserve will be lowering interest rates at some point. Given that yields move lower, there's an inverse relationship to price and yield. TLT stock pretty much has bottomed out and will be moving upward anywhere from 10 to 20 to 25% over the course of the next 3, 6, 9 months. During the same period of time, the Federal Reserve is actively trying to reduce price pressures, which means they actively need to reduce consumption here in the United States, which means less revenue growth for companies, which means there's a lot of risk in an investment in Netflix at near all-time highs. We've already seen the weekly chart going all the way back where we saw the big slaughtering of Netflix stocks moving all the way down. Yeah, sure, we're getting close. We're also getting close to the point where we start seeing numbers coming in on the economy where unemployment is starting to increase. Rate of growth is starting to decrease. Savvy investors will hit the sell button real fast. It does not matter that the Federal Reserve will be lowering interest rates in response to that. The damage will already have been done. This economy is firing on all cylinders. Therefore, price valuations are a little high with a lot of risk to the downside. For me, the U.S. 10-year Treasury, the downside is incredibly low because the Federal Reserve will be lowering interest rates, which means the ETFs that I have, TLT stock, moves up. For me, I get that bond investing isn't sexy. Profits are, to me. That's the move I'm looking at. 2.957 on a measuring stick. Netflix stock, it's near its all-time high. The downside risk is way big. Treasuries, profits, to me, the downside risk is minimal at best. Upside potential is far greater. I'm passing on Netflix stock. To keep in touch with what's going on with this particular stock, make sure to hit that like and follow button. We'll see you in the next video.